What if I told you there's a strategy that you can implement today that can help you quit your job in 90 days? Well, that's not coming from me. That's coming from the actual founder of this strategy, ICT. In today's video, I'm going to show you exactly how ICT Silver Bullet works and how you can start implementing it today in order to become profitable. If you want this video to work for you and fully understand how ICT Silver Bullet works, please make sure you watch this video till the end. I'll also be giving away to you guys a completely free ICT ebook on how this Silver Bullet works once this video reaches 30 likes. So if you don't want that ebook, make sure you hit the like button on this video. But enough of that, and let's get right into the video. Alright, so what I'll be doing is I'll be giving you guys an extremely easy breakdown of ICT's Silver Bullet so you can easily understand it. I'm going to start off with what is the Silver Bullet, what pairs and times does it form, an actual trade plan for the Silver Bullet, and I'll be showing you some high probability setups and some tips and tricks you can do to increase your probability when you see a setup. Now, first things first, what is actually the Silver Bullet? The ICT Silver Bullet is a time-based trading model that works with liquidity sweeps, market structure shifts, and fair value gaps. It is one of the best setups to start off with as it is extremely easy and it forms nearly every day. The creator of the Silver Bullet, ICT himself, said you can quit your job in 90 days and become profitable by using only this strategy. Now, what times and pairs does this strategy work best on? Well, it works in London session and it also works in New York session. Now, for London, it works between 3 to 4 a.m. New York time and 8 to 9 a.m. UK time. And for New York, it works from 10 to 11 NYC time and 3 to 4 UK time. Now, for pairs, it works best on USD, GBP USD, and NAS 100. This is from my personal own testing and doing my back testing. I recommend you guys test it yourself and see what pairs works best for you. But if you're starting off, I'd recommend you only use these 3 pairs. Now, here comes the actual trade plan for the ICT Silver Bullet and how to actually trade it. The first thing we are looking for is liquidity before the actual Silver Bullet timing. This could be a previous day high/low, previous daily high/low, Asia session high/low, London session high/low, previous week high/low equal highs or lows. As simple as that. All we're doing is marking out our liquidity. That is all we are doing. Now, you can see here, this blue line right over here is before the Silver Bullet timing. So this is between, if I show you really quick, this is between 10 and 11. So this right here is 10 o'clock, okay? The Silver Bullet is just about to start. Now, what we're looking for is simply liquidity before this actual Silver Bullet timing. You can see we have a high here, we have some equal highs here, we have some equal lows here, more of a low, and we also have some equal lows here. Now that we've marked out our liquidity, we simply wait for the market to take it out. It's as simple as that. You don't do anything else, you just wait for the market to take out your liquidity. We're looking for a liquidity sweep. You can see right over here, the Silver Bullet starts, and as soon as it starts, it takes our liquidity right over here. Okay, it did build some equal highs liquidity, building onto our previous liquidity right over here, built onto that, but then it shot down and took this low right over here. Now, the next thing we want to do is after the liquidity sweep, we simply wait for a market structure shift with displacement. Now, for those of you that don't know what displacement means simply strong candles and a big volume, okay? So it's a series of candles that are all very, very strong. It's really, really easy to see on the chart. Here you can see we have our liquidity that was taken. Again, see strong candles here. And then we have a market structure shift with displacement right over here. Now, for market structure shift, you need the candle to close above the wick, okay? A wick wouldn't count. A wick would simply be classified as a liquidity sweep, okay? So what we're looking for is we're looking for the candle to close above our earliest high. So the high right here, this one right here, we're looking for a candle to close above it and give us our market structure shift, okay? It's as simple as that. Now, after we've marked out our market structure shift, we then mark out the first imbalance that caused the market structure shift with displacement. This is where we enter from. So you can see this market structure shift here with a big series of candles, which is our displacement. Now, what we want to do is we want to mark out our imbalance, the start of the imbalance. So basically the first imbalance you can see, which is right over here. It's as simple as that, okay? You mark out this imbalance right over here. Now, one thing you guys need to understand is if market took sell side liquidity, you'll be looking for buys. And if market took buy side liquidity, you'll be looking for sells. Now, from here on out is very, very simple, okay? We want to target opposing liquidity for a minimum of 1 to 2 RR. Again, opposing liquidity could be equal highs, equal lows, previous session high. It could be anything. Just opposing liquidity is simple as that. Even opposing order blocks or opposing imbalance. Then you want to enter from the 50% of the imbalance. Now, for those of you that don't understand what the 50% means, is simply the halfway line of the imbalance, which you can see right over here. This is the 50% of the imbalance, and we have a stop loss below or above the swing high or low. Okay, so our stop loss would rest somewhere around here. Now you can see this is the result of this silver bullet. Breaking it down from the beginning, okay, we have our liquidity here. Market then takes the liquidity. Because it's a sell side liquidity, we are looking for a buy. So what do? We wait for a bullish market structure shift. If we take sell side liquidity, we wait for a bullish market structure shift, and we're looking for buys. If we take buy side liquidity, so if we take the liquidity above here, for example, if we even went down here, we would look for a bearish market structure shift, and we would take sells. Now you can see we have our displacement here, close above the wick right over here with our market structure shift. We have our imbalance right over here. We enter off of the 50% of the imbalance. Stop loss just below or above the swing high or low. Again, this is, it was a low, so it would be below it. And then we target opposing liquidity. Okay, again, this could be a high, equal highs, whatever. All you're looking for is opposing liquidity. It's as simple as that. Now, if you still haven't understood the silver bullet, don't worry. What I'll be doing is I'll be going on a live example and breaking it down even further, step by step on a live market result. Alright, so I'm here on GU. What I'll be doing is I'll be breaking down the silver bullet example that I showed you previously even further, so you guys can get a good understanding of it. Now, first things first, obviously, I did say it works best on GBP USD, NAS 100 and Euro USD, so we're going to pick one of those three pairs and we're going to pick GU. Now, second thing, what times does the silver bullet work on? It works between 10 to 11 NYC time and 3 to 4 NYC time. Okay, we're going to be trading the New York session silver bullet. Okay, the London session silver bullet is between 3 and 4 a.m. NYC time. You can see my trading view is calibrated to UTC -4, meaning we are in New York time. Now, what we want to do now is we want to mark out the beginning of our silver bullet so we know when to get involved in the market. Okay, simple as that. There's an indicator that does it for you, which I'll break it down, but I'll just mark it so you guys can understand right over here. Okay, we have 10 to 11. This is our time frame to get in a trade. Okay, as simple as that. Once we get out of this time frame, we're not going to be looking for any more trades. Okay, an indicator you can use to help you see this easier is called sessions. Okay, you simply go to indicators, type in sessions, and it should come up. Once you have this right here, you go to settings, and you see you have London session and New York session. Now, I've enabled both of them obviously because there's a New York one and there's a London. See, my time is calibrated 3 to 4 a.m. and then 10 to 11 a.m. Okay, you simply go here, you write 10 a.m. for New York session, then 11. As simple as that. Okay, now I've turned this indicator on. I'm just going to let it play a little so you guys can understand what it does. There you go. It basically shows you the beginning of silver bullet from 10 to 11. It will display like a red background on the chart. But enough of that. First things first, what we need to do is actually mark out our liquidity. Okay, we have a high here. We have another high here. We have some equal highs right over here. We have a low right over here. Then we have some equal lows right over here. Okay, this is all of our liquidity. Okay, if we take buy side liquidity, we'll be looking for sells. So market starts to push up, takes this liquidity. We are looking to take the market down. Why? Because what market likes to do, it likes to take liquidity and take liquidity again. That's why we wait for liquidity to be taken and we target opposing liquidity. Simple as that. Okay, and if we take sell side liquidity, we'll be looking for buys up to opposing liquidity. Okay, so it's as simple as that. Now, if I play the market, what we're looking for now is a liquidity sweep. You can see this is not a liquidity sweep, simply building onto these equal highs. Again, I wouldn't really say this is a liquidity sweep either. You can see it's just building on those equal lows. Right here, this is our first liquidity sweep that we have. Now, what we want to look for is a bullish market structure shift. Why? Because we had sell side liquidity being taken. Now, what we want to wait for is bullish market structure shift with displacement. Okay, if I play the market out, this could be one of our highs that we're looking for market structure shift over here. This could be another high that we're looking for market structure shift right over here. Any of these highs I'm looking for to be taken. This is another high that could be classified as a market structure shift if we are broken above it. Simply just follow the trade, guys. Okay, simple as that. Okay, this is liquidity right over here that I had marked out previously. That's supposedly going to build up, I assume. You can see, so we're taking that liquidity again. So now we have a new, apologies, so now we have a new high that we are looking for, and it is this high right over here. Okay, all I'm waiting for is for a market structure shift of that high. You can see we have it right over here. Okay, we have a strong move. If I quickly remove all of these, as these are relevant now, because we've had a market structure shift. If I mark this up for you guys, so you can understand further. Market structure shift, simple as that. MSS simply means market structure shift. Okay, we've broken above this high with a candle. Okay, we haven't wicked above it, we've broken it with a candle. It is a little candle, but we've still broken above it with the candle. Okay, simple as that. Now, our market structure shift, did it have an imbalance? Yes, it did. It had loads of imbalance, but what we want to do is we want to look for the earliest imbalance. Okay, which is this one right over here. This is the only one that we care about. Okay, and we also want to enter off of the 50% of this imbalance. Simple as that. You can get your fib to mark out, but you can also just estimate the 50% simply by looking at it. Simple as that. See, this is the 50% of our imbalance right over here. Again, why is this valid? This is valid because it had a strong move up. Okay, this is a displacement because the candles are big. It's a series of big candles that broke market structure shift. Okay, so this is a completely valid imbalance, and we are also looking to buy the market because we had sell side liquidity being taken. And when one side of liquidity is taken, what the market wants to do, it wants to go take the opposing liquidity. So what we do next is we look for opposing liquidity. You can see we have some equal highs right over here, equal highs here. We have a high right over here. We have a high right over here too. So any of these points of liquidity will be valid. Why? Because it is opposing liquidity. Market wants to take out opposing liquidity. A lot of people, they don't explain fully why they're taking a trade, and I literally hate that because you won't understand why I'm taking the trade. It's as simple as that. We took sell side liquidity, so we are buying the market. Again, just to reiterate, simple as that. Now, we want to enter the market off of the 50%. Stop loss just below this low, that should be okay. Now you can target this for a 1 to 2.9, or you can target this, or you can target this, or you can look for an order block within here somewhere. Okay, it's as simple as that, or an imbalance, whatever you want. You can target highs, equal highs, order blocks, imbalance, whatever you want. Okay, there's not really any rules to what you can't target, to be completely honest. Now, if I play the market out, you can see what I tagged in. If I was to increase this, what tagged in, what I'll be aiming for is actually this, simple as that. A quick 1 to 9 risk reward. You can see already hit the trade. It's literally as simple as that. Okay, let's see if market would want to go above this point. If I play this out, go ahead. Go on a faster time frame, play this out. Okay, that went for a bit long. Actually, it was still the same. There wasn't that bad, but you can see you could have also aimed for these equal highs, as simple as that. Obviously, it would have taken a bit longer, and it would have been like a sniper entry. You would have never gone into drawdown, but you would have seen your profit go up and down, up and down, up and down. But yeah, this silver bullet is literally as simple as that. I know a lot of people do try to overcomplicate, and some people do even have a more simpler approach than me, where they just trade an imbalance. They don't trade any market structure shifts or liquidity grabs. Again, that is their approach. This is my approach, and what's working for me, and what I think is the best for a beginner to understand it fully. But yeah, this will be then the video. If you guys did enjoy this video, please make sure you go follow my Instagram, you like this video, subscribe, and also there is a trading mentorship down below in the description if you want to learn how to make a full-time income from trading and become a funded trader. But yeah, that's all from me, and take care.